On the institutional adoption front, I really do want to reemphasize the highest risk now for any institution is staying on zero. Like, whereas in the past, it was easy to say, man, it's risky getting into crypto, like we're not going to have any allocation. Now the highest risk is actually beyond zero. So it's time you're going to see a lot of people move from 0 to 1 next year, and that's just like such a huge moment for crypto.
Welcome, everybody, into another episode of Coinage, as it has been a very wild week after we heard from Fed Chair Jerome Powell and we saw the crypto market meltdown that ensued. And now, potentially, hopefully, maybe, perhaps a bottom to discuss as we wrap up the wild week that was. And very happy to have back on Coinage with us today, Cosmo Jiang over at Pantera Capital, portfolio manager there. Cosmo, it's good to see you, man.
Hey, great to chat again, Zach. How are you?
I've survived this week. It's been a bit of a wild run.
Yeah.
And it's right before the holidays, but I don't know. Maybe we've saved Christmas and we're going to talk about that, Cosmo. But how have you been? It's been a while since we had you on last time.
No, I mean, look, it's I've been great. Ever since the election, we've really there's been a gust of wind that's really helped propel the industry forward, and so it's just a really exciting time now. There's a lot to do. There's a lot to look at. Obviously, it's easy to get distracted, but yeah, I'm super pumped about where we are, and so yeah, things are going really well.
Yeah, a lot to dig into in terms of that, because I think you guys just celebrated officially from the original Bitcoin fund at Pantera 1000x.
Yeah.
So it's exciting to have you on because, you guys have seen a lot of things through prior cycles. Last time you and I were chatting was kind of your original, I guess, call for our viewers and other people in the Coinage community to keep an eye out for altcoin season potentially beginning. And today I think we're going to dig into maybe potentially chapter 2 of altcoin season and what Cosmo and the rest of Pantera is looking at. But why don't we just start with what you made of this week? Because, we had Grayscale on yesterday. We had Bitwise on yesterday. Both of them in the morning said buy the dip. In the afternoon, the dip kept dipping. What does Cosmo say about where we're at now after everything we saw with the Fed, fewer rate cuts next year, your expectations for where we're at?
Yeah, I mean, look, obviously markets are dynamic, so just timestamping this being Friday morning or Friday noonish. Look, clearly what happened this week was the market was bracing for the Fed to come out and be a little bit more hawkish than before. Rate expectations already tempered quite a lot in terms of the number of cuts that people expected next year. But when people got a look at the voting that happened for this cut that happened this last month, as well as the updated economic projections, it became pretty clear that the Fed governors and the decision makers that be over there are a lot more concerned about inflation staying higher for longer, and so Fed came in a little bit more hawkish than expectations. We had the 25 bips cut as expected, but really it was all about the dot plot, and the dot plot showed only 50 basis points of cuts next year, or 2 cuts as opposed to 3 in the prior years, and inflation being close to 50 bips higher than they expected, and in the high twos. And so and then Jay Powell in his I think he's always very reasonable and measured when he talks, but it was very clear he made the very clear point that the December cut itself was a much closer call than expected, and that while they're on track to continue cutting, like the extent and timing of those cuts is certainly in question now. And so it really calls it to question the pacing of rates, and so we've seen that reflected in the markets, equities, crypto, rates since then.
Yeah, it wasn't. I mean, I think the last time we had you on may have been all the way back when we saw kind of the unwind of the yen carry trade, or the basis trade back then. And, some people have been talking about maybe the idea of a lot of that happening with the Ethereum ETFs when they first kind of got launched, and we saw kind of an uptick in ETF inflows for Ethereum. And the idea there being that, maybe potentially traditional investors have woken up to the opportunity in Ethereum, or perhaps there's just more, I guess, kind of sophisticated trading, shall we say, between those and maybe futures. And so, I guess when you kind of look at the washout that did happen, because crypto really did get hit pretty hard, whereas traditional markets, yes, it was 10 consecutive days of down trading. But, when it comes to the percentages, what do you make of maybe this potentially being that flush out? Was it just leverage? And how confident are you to maybe say, look, we're still in this upcycle. Don't worry about kind of where we're at right now.
Yeah, I think there are two different questions there. One is like where are we locally, and then two is like where are we on a medium to longer term. I certainly spend more of my time thinking about the larger picture trends. Uh, but maybe to hit on the short term first is, yeah, I mean, look, there over the last couple of weeks there have been three major leverage washouts actually. There was 2 weeks ago, I think it was like a Friday, and then there was like a Monday sell off, and then after the FOMC this week there was a big sell off. And so it really is a story of a few things. One is, um, the excitement is very high for crypto, and so things are toppier than usual, and things and markets are a little thinner than usual, and so you're going to see larger moves, these larger swings. The second is there was a major leverage washout, right? There's been close to $2 billion of long liquidations over the last couple of days, and open interest, which measures the amount of futures trades that are on all these perps exchanges, declined by $15 billion, or so like $15 billion of positions were taken off, and largely in everything ex Bitcoin and ETH. To put that in context, $15 billion is almost 20% of open interest, and close to 30%, 30 or 40% of open interest in everything ex Bitcoin and ETH. So very clearly, huge leverage washout. I think this is all happening at the same time that people are worried about year end. There's a lot of talks whenever we get to December about tax loss harvesting, people selling to be able to pay themselves at the end of the year.
Mm-hmm.
I don't really buy into any of that. Certainly, as a manager of or steward of other people's capital, we're trying to invest for the long term. So we don't do like weird P&L taking out at the end of the year. It's like not how we manage it. Like obviously, it doesn't matter on the long term basis.
Yeah.
And so I don't think it does for many people, but just the initial sell-off gets people really scared. Then all of a sudden everyone starts talking about it and it becomes something that like takes on a life of its own.
Yeah, I think I guess it's we've got 10 days left essentially ish of 2024, and you're right. I think it kind of be foolish for us to talk about hey what's going to happen over the next 10 days, but I do want to kind of look at maybe the next 3 months or so, and really back up and reference your guys' letter in terms of where you guys think we're at, because it is exciting to think about kind of what happens next after we've seen so many positive momentum drivers after the election, and we have a new administration coming in. We just had Commissioner Peirce on the show, publish
Mm-hmm.
that interview. I just want to play a little bit of it, Cosmo, to get your take on kind of, I think, what we heard from your guys' most recent letter, which is, look, we are undergoing a huge categorical shift when it comes to Washington looking at this industry and enabling the industry to finally grow. We asked her about two potential drivers of that. I want to get your take from a market's perspective because it seems rather important and perhaps overlooked. Mainly in-kind redemptions and staking from those ETFs is what we asked her about. Just want to play the clip from that interview and then get your take on the other side. Here's what Commissioner Peirce told us.
It's something that people raise with me pretty frequently, so I imagine that question is going to be posed to us early on. And as I said, I'm open to reconsidering both in kind and staking to think about again how can you allow people to design the products in the way that's most useful to the investors in those products. Certainly, if you're able to, I mean, if it changes from a majority of commissioners who don't want things to go through to a majority of commissioners who do want things to go through, then yeah, it's easier.
Now, maybe it's too, inside baseball to ask you specifically, hey, Cosmo, do you think in-kind redemptions or ETH staking being approved would be huge here? But I guess I don't want to miss the forest through the trees or whatever the phrase is. But I do think that on the margin, it's going to be huge to see the SEC kind of start to let things happen that a lot of people in crypto want to have happen. So what do you make of, I guess, those two things or just the larger narrative in general, which is friendlier crypto regulation?
Well, yeah, happy to talk on ETFs first, which is that, yeah, I think I mean, what Commissioner Peirce said just now is very galvanizing. I think it's exciting to see that the SEC will take a more constructive stance toward thinking about how we can have more products that people can access. Certainly, these small tweaks, I do think of like ETH staking and in-kind contribution redemptions as like small tweaks on the margin, but like small things add up, as they say, pennies make dollars, and so like all these small things are super helpful for market structure, making things more efficient, making it easier for people to access this, marrying together the two worlds of crypto finance and crypto markets versus the traditional finance rails, and like making them converge a little bit better is always good, because right now those two capital pools there's still a lot of friction going back and forth. So all that is great. I mean, next on the docket really for the ETFs that I think could be a way bigger deal is certainly these combination Bitcoin and ETH ETFs, two of which were just approved to take the next step by the SEC yesterday. So that's very exciting, because it really portends more and more multi-asset ETFs, which is really like when we think about going from a Bitcoin dominated or Bitcoin only narrative timeline to a crypto as a blockchain as a technology, which is everything else. Like, we need these multi-asset ETFs to happen. Otherwise, it's really hard to get capital flows to support everything else. And so it's very exciting to see us start to move in that direction. Multi-asset ETFs, Solana next, maybe all these other tokens. And so that all is super exciting in the world of ETFs. And I expect that to play out pretty reasonably quickly over the course of the next year. Which brings me back to the point about just like the shifting U.S. political landscape and the regulatory landscape, I think is really, really important to talk about. And sure, a lot of ink has been spilled, but it's just so important. The reality is that regulation and arguably somewhat a somewhat hostile stance that the U.S. has taken against crypto projects has really hurt the flow of capital and the flow of entrepreneurs into the space. And so the ability, while the short-term price action in our market is nice, the longer-term implication is actually very profound, right? If we can finally get clear rules of the road, then you'll get more innovators or more entrepreneurs saying, hey, yeah, maybe I do want to launch a token. Maybe I do want to pursue this crypto protocol that in the US, as opposed to having to move abroad or do something like that. And so that's great, right? One new situation that we've encountered over the last couple of years, just to give a very specific example, is that a lot of entrepreneurs have come to us and said, hey, we believe we can deliver a lot of value by creating a crypto protocol, but are afraid of getting sued. So do I need to move outside of the US? Which is crazy, right? And I've had personal friends do that.
Well, I mean, yeah, it's not too different from what Coinage had to navigate as well, is the idea of, hey, can we set up shop here as a community?
Exactly, right? And that ends now. Like, there are teams coming to us that are saying, like, wow, maybe we can now come home, right? Maybe we can now come back and create jobs, create innovation here in the US. And so that is what's the most exciting part. We're starting to see some of that reversal. We've had teams already move from Singapore back to the US. And that's just like the start of what I think is a much larger trend.
Yeah, it's obviously something that we've seen President Trump also say that he wants to do, and on the campaign trail saying that he wants to make the U.S. the center of the crypto universe or the planet. But I guess, Cosmo, when we look at maybe more ways to play it for investors out there, and obviously you run the fund in terms of what makes sense from a trading perspective. We've talked a lot about the projects that you enjoy, and obviously Ton up pretty nicely this year on reading through your letter. So there's a lot of things that you guys enjoyed this year, but I want to focus on what you put in the letter, which, by the way, if no one's read Pantera's letter, I think some of the best in the space. So well done, sir. But in terms of the chart, I want to show this chart because last time we had you on, you said, get ready for phase 2. And you kind of describe what that means, right? And so how big is the opportunity for these other altcoins? How do you see that shaping up? What inning are we in now? And what should people know?
Yeah. I think just to describe this a little bit, I think it's helpful to think about frame the digital asset cycles as like Bitcoin. Well, really frame the market as like Bitcoin versus everything else, which is blockchain and technology. And we invest in Bitcoin. Clearly, it's found product market fit. And what we've typically seen is that in these cycles, Bitcoin is the first to really perform. And the reasons for that are pretty obvious, which is that it's easy to access. The access made much easier by the ETF this year. And typically when investors are legging into crypto, it's like, we don't really know anything, but Bitcoin's the thing that we know, so let's just buy that first. It's really in that second phase, though, when everything else, or what we call, longer tail tokens, really start to outperform. And there are real supply-demand reasons for this, right? It's not just mumbo-jumbo technical chart stuff. It's really that on the supply side, I just talked about entrepreneurs, but these entrepreneurs now have the opportunity to release, market these new products And so there's more things to invest in and to get excited about. And on the demand side, now that investors have made a good amount of money on Bitcoin hitting new highs, they're more comfortable seeking out these what they perceived as higher risk but potentially higher growth tokens that really underpin all these other use cases. And so we're really excited about, we love Bitcoin as a firm and we think Bitcoin has found product market fit. But what we're very excited about as investors in the space is blockchain technology, which is everything else. And we think, if you look at price action, Bitcoin is up 40-50% from prior highs. And so very clearly, it'd be wrong to say it's not mid innings, at least for something like Bitcoin. I think that has a very long trajectory to go, and we have many years of strong performance for Bitcoin. But if we look at everything else, which is blockchain technology, which is everything that we invest in, everything outside of Bitcoin, it's like, man, we are still such early innings. If we were to look at price action this year, everything else is really underperformed, but Bitcoin by a lot. So there hasn't been that strong price rebound in everything else. But we're on the cusp of this opening up of innovation, this legitimacy of this asset class that should really, really propel all these other things forward. And we're already seeing that, right? Like post-election, the Bitcoin dominance, which measures Bitcoin as a percent of total crypto market cap, has declined from 60 to 54 at some point. So nearly 10 points of relative outperformance by everything else. I fully anticipate that to continue if indeed we are successful at creating good value-added products in the blockchain space.
Yeah, I think that was the interesting thing, and you and I talked about that last time you were on, was kind of the confounding move for Bitcoin dominance to continue rising even after we thought that altcoin season was here, and it just kept going. And I think, again, as you said, it's a result of kind of changing market dynamics. There's so many things going on because if you make it way easier for people to invest into this asset but not all these other ones, obviously you're going to see kind of like traditional cycles get a little bit, warped. And so when you kind of move ahead, the other big thing that people are chatting about is the idea of ETFs now popping up. You have the Bloomberg boys, Eric Balchunas and James, talking about a bunch of ETFs getting approved next year. It seemed like, from what we heard from Commissioner Peirce, that that's probably true, though she didn't go as far as saying, yeah, everything's getting approved. But I mean, if that happens, you still need investors who understand these things. And given kind of the slow start that ETH had, I'm not sure a Ripple or a Solana or any of those, just because they can put an ETF together, you see kind of the same things. But maybe I'm wrong on that front. How do you see kind of that dynamic changing altcoin season this time?
Well, yeah, I mean, Zach, you know me, I'm like a religiously fundamental investor, born and bred in TradFi. And so I would just say price follows fundamentals. And the reality is that maybe ETH has had a tougher spot, but ETH has had a tougher year, right? Like the ETH activity has not been impressive this year. But if you look at something like a Solana, man, when we talk to the allocators that we talk to, whether it's, any of the large bank wirehouses, without naming names, but there's only so many, it's very clear that like when we talk to them, they talk about how 95% of the conversations are about Bitcoin, but the next most talked about token is Solana, and ETH is a very distant third amongst TradFi people who don't own crypto, right? And so like that just speaks to, like, people are aware of what stuff is working, where the growth is, and people just want to buy assets that represent tokens, that represent protocols that are growing and doing very well. And so, in order to get excited about an asset class, like, you really have to believe a couple of things. One is certainly the macro point of capital flows coming in. And then two is really back up even a little bit more. But you have to really care about three things. Usually you only have to care about two things. But in crypto, the third thing you actually have to care about is the legitimacy of the industry. One of the biggest no's that we get, or one of the first no that we receive for any institutional investor is like, lack of regulatory clarity, throw up my hands, can't invest, buy. That bear case is now gone, right? Yeah. And so that is a major blocking point that is no longer with us. And that's like other asset classes never have to deal with. The other two that everyone has to deal with that are, to me, more important now that we can move past the regulatory piece is like, what is price versus fundamentals? Are fundamentals improving? And the macro point, which is like, are there good capital flows? On the capital flow front, it's exactly what you said, which is that the ETFs have helped a lot, but they've really only helped Bitcoin. And so getting these multi-asset ETFs, getting other ways to access Solana, all these other tokens, is very important. I think will be very helpful. And then, certainly capital flows coming back to allocators like us, which, we're in the great fortune of starting to see, like that helps us because we're the ones really setting prices and the active investor in the space, picking and choosing tokens. And so capital flows piece I actually feel pretty good about because of the constructive stance that we have on these multi-asset ETFs. And then the point about price versus fundamentals, man, like fundamentals are really improving. You're seeing users, transaction activity really skyrocketing on Solana, on Ton. You're seeing a lot of new innovation in DePIN. You're seeing a lot of new innovation in AI. There's just like a lot of stuff to get fundamentally excited about in crypto. It has to continue, but if it does, it's great.
Yeah, that's a big if. It does have to continue. And I guess, in terms of what has you most excited now, because I'm just looking at the Bitcoin dominance chart, it's kind of interesting to kind of see the way that this has kind of jerked around. Because like you said, we were up at 61, down pretty violently to 55, and kind of like this first false start, if you want to call it that, of altcoin season. I'm not sure. We'll get your take on that because of the unwind. And now back up to about 60. So I don't know how you would maybe fast forward that chart to see where we go. And particularly, to extend the question, Cosmo, what has you most excited when it comes to those projects, the ones that you and I watch, the ones that our Coinage co-owners watch? I think we've talked about a few of them in the DePIN space, whether it be Hawkish or some of the other ones. But what makes you most excited when you look at the opportunities?
Yeah, a lot there. But I think on the Bitcoin dominance piece, I think if you like zoom out back far enough, you'll realize that the steady trend of blockchain innovation suggests that Bitcoin as a percent of total market cap should decrease over time, right? If you really believe that we are going to go from what is maybe tens of millions of users today to billions over time, then almost by definition, that means there have been more things that have been built that are useful, that are serving a purpose. And those should grow in value at a rapid pace. And so you do see over time that Bitcoin dominance hits a new trough every cycle. I wouldn't be surprised to see that again. Bitcoin dominance has increased nearly 20 points this cycle. Could it reverse entirely because everything else is doing well? Totally. Was this an initial, I wouldn't call it a false start. It's like crypto price action, as everyone that's listening knows, is extremely volatile. And so getting these like 20%, 10, 20% moves in one direction or the other are totally reasonable and sort of within the realm of like normal standard deviations in a bull market. And so I'm not too concerned about that. As far as like innovation that we're excited about, I like to talk a lot about two areas in particular that really take up all my brain space today. One is DePIN and the other is AI. And we can definitely dive into each of them because we could speak like at length about both. But on the DePIN front, at a high level, the most exciting thing or the takeaway for people that is really misunderstood or undercovered is that there are now Fortune 50 companies paying crypto protocols for their services. The US government is now subsidizing crypto protocols for their services. Like this is a story that goes totally underreported, but protocols such as Helium, Hivemapper, GeoNet, like they are finding incredible product market fit. They're getting paid real dollars by large businesses like AT&T, T-Mobile, or by the US government like the US Department of Agriculture, because they've discovered that actually crypto is creating a better product at a cheaper price. And so we're going to go with that solution rather than the legacy solution.
Yeah. No, I mean, I think we highlighted it to just give Coinage a shout out here. We did have the founder of Helium on as one of our crypto projects of the year, talking about kind of exactly that. A lot of times it's like, hey, you got to take on the big behemoths, and it's not necessarily always either or. And it was really cool to see kind of Helium present itself to the market as, hey, look, we can help you in times of congestion, offload your networks. And as you said, some major networks and major telecom providers taking Helium up on that. So it is kind of cool to see. At the same time, Cosmo, we talk about what's exciting. I wonder if there's anything that is striking you as potentially a flashing red alarm bell. And obviously this week, maybe, as you said, always a good reminder that shit's going to get volatile here. And when you look at some of these things, I didn't think I was going to do it, but I had no choice. I had to ask Hester Peirce yesterday about Fartcoin just because it's there. And whenever you see coins like that pop above $1 billion, total market cap, maybe that's a red flag. And also, maybe when you see some Dino coins, as we discussed before, Ripple jumping 300% in a month, maybe that's a red flag. And I could be wrong on both those points. But is there anything that you're saying, okay, maybe again, a reminder here, watch this or watch that, to people out there who are maybe, doing this for the first time?
Yeah, I think again, this goes to sort of like your time frame, right? I think on a short-term time frame, if you're a short-term trader, I mean, God bless, good luck, but like there's a lot of things that you can watch out for, and certainly like these small things like Farcoin reaching 1 billion, or funding getting to 30% a couple weeks ago, or everyone on the timeline talking about the same things, like that is sure that's scary, but you really got to zoom out. And if you think about the three major tailwinds that we have going into next year, like one is regulatory clarity, one which is like, again, crypto was borderline illegal for the last couple of years, and all of a sudden it's being promoted by the president. Like that is wild 180-degree shift
Yeah.
in the legitimacy of the asset class. If you're an institutional allocator, you cannot not talk about crypto anymore. Whereas in the past, yeah, of course you could ignore it. Now, if you aren't, you're like doing a disservice to your constituents. And so it went from being like totally reasonable to ignore to you are no longer allowed to ignore it. And then the capital flows point, like the Bitcoin ETFs have been insanely successful this year, and there will be more ETFs that are successful. And then fundamentals are super exciting. So marrying all those three things, like, man, on a medium to long term, I'm just so excited about where we are. On a short term time frame, yeah, things can get crazy. I'm not too worried about small things here and there, but if we are thinking very locally, I think there's a huge washout those last couple of weeks, so it feels like a safer spot to be putting on bets ahead of the new year.
Yeah, that's what we heard from Bitwise's Matt Hogan yesterday as well, saying, look, if you've always been sitting there waiting and saying, hey, wish I got in, this was basically the opportunity as we saw all of that unwind. But Cosmo, just to wrap up, because, again, love having you on the show always. We always learn something. We most often learn multiple things. But I want to get your take in terms of bold predictions for next year. Maybe something that you say other people are missing in terms of, you think it's possible, but maybe the market hasn't really woken up to it yet. It could be anything at all. But we've been having founders on kind of throw out their best guesses of things that we can maybe revisit once we turn the page at the end of 25 and look back and say, who was right about these things? What are you, I guess, predicting for next year that maybe people are missing?
Yeah, I maybe a few things come to mind. One is on the institutional adoption front. Uh, I really do want to reemphasize the highest risk now for any institution is staying on zero. Like, whereas in the past it was easy to say, man, it's risky getting into crypto. Like, we're not going to have any allocation. Now the highest risk is actually beyond zero. So it's time you're going to see a lot of people move from 0 to 1 next year, and that's just like such a huge moment for crypto.
Mm-hmm.
How do we measure that? I'm not totally sure, but I would expect Bitcoin ETF flows and like aggregate ETF flows to be some multiple of whatever it was this year, which already was a fantastic year. Um, I think the other is like I would expect to see like real breakout, widely known applications across both DePIN and AI and blockchain next year. We have our
You
guesses and
mentioned,
we placed our bets, but
yeah,
that's like no doubt in my mind we will see something exciting in both those areas.
you mentioned AI, and I want to dig into that a little bit before we let you go, just because we've had conflicting views just this week. Actually, we had Helios Labs CEO Mert on the show talking about how that might be too hyped in terms of
Yeah.
none of the autonomous agents are really autonomous yet, but maybe advancements will get there. And you don't need to squint too hard to maybe see why AI agents would need crypto. Obviously, they can't kind of really have bank accounts. But I mean, what is your take on that? Is it really overhyped? How does it kind of evolve into the next chapter?
AI agents, I think, is one of the most exciting thing that's happened in the last year in crypto. We've started to see these autonomous agents actually transact on chain. I do agree with the caveats that look, these things are very early and they're kind of simple today, but you're already starting to see them get advanced at a very rapid pace. And just this past week, we had an example of an AI agent paying another AI agent to create an image for them or to create a marketing campaign for them. And this all happened on chain in public, which is pretty crazy to see. And so I think the experimentation there is exciting. The energy there is exciting. And I would fully expect these things today they don't have a lot of capability beyond tweeting and potentially like sending transactions back and forth. But man, that's going to build very quickly over the next few months. And so we're really excited about everything that's going on with AI agents.
Right on. Well, we'll have to have you back in the new year to discuss maybe how much we've grown in that endeavor, and we'll revisit it in the new year. But for now, Cosmo, appreciate you taking the time to come on as always. Happy holidays to you, my friend. And
yeah,
thank you
happy
again
holidays,
for
Zach.
popping on.
Thanks
It's
for
been a
having
crazy
me.
week, so I know anytime you make time for us, I always appreciate it. So thank you again. We'll chat in the new year. Happy New Year to you, my friend.
Yeah, happy holidays, happy New Year.
Right on. That'll do it for us this time. If you haven't watched our interview with Hester Peirce, you can go check that out at coinage.media, along with all the big headlines in crypto. As always, for Cosmo, for everybody here, for myself, I think this is it. Happy holidays, happy New Year, everybody. We'll see you again soon.